Obviously a big surprise for most people, the decision taken by the Central Bank of Kenya. Did it come as a surprise to you?
No, I would say it was not entirely unexpected. I think the existing monetary policy stance of the central bank was adopted sometime at the end of 2008 following the global financial crisis. And during this period, the central bank reduced the rates of the central bank rate in 8 steps from 9% to 5.75%. I think clearly this is now signaling that the end of the we have passed through that period of 2 years where the central bank was really looking at stimulating growth, and it was quite successful because from a growth rate of about 1.6% in 2008, the economy has recovered to grow to 5.4%. Right. So I think really it was imminent. It was either it was a question of whether it would happen at this MPC meeting or at the following one, but the stance was bound to change.
The implications for bank lending rates and consumers?
Well, definitely we'll see an increase and upward pressure on bank rates, I think immediately on the deposit side. And on the lending side, I think consumer lending, there will be a shrinkage in terms of volumes definitely. And I think the banks would wait a little bit before raising the rates. So, but over the next 2 to 3 months, we could see upward rate pressure on consumer lending rates as well.
Let's talk about the implications for the shilling, because immediately after the central bank made the announcement to tighten monetary policy, the shilling just looked a little bit more stronger against the dollar.
I think to a certain extent the hand of the central bank was forced by developments on the shilling front, and there was a definite need for the central bank to tighten the liquidity in the market, because that seemed to be driving the weakness of the shilling. My own view is that definitely we'll see now strengthening of the shilling going forward with the change in the monetary policy announced by the central bank.
I mean, obviously, as you're suggesting, the central bank has had to forego its growth priorities and now manage issues like inflation. And we know that Kenya is a net importer of things like petroleum products, which is starting to create some anxiety about inflation in the Kenyan economy. The position that the central bank needs to consider is that of its balance of payments with what's happened with the shilling. What are we likely to see going forward, just by way of affordability of managing some of these imports?
Definitely the imports has become a major cause for concern and has led to a growth in inflationary expectations. There is, I think we will continue to face, I mean, as a net importer of oil, there is no other choice but for Kenyans to face some hard times going forward. I think by this action, the central bank has shown that it's now moving away from its growth agenda and returning to its principal long-term objective of price stability. So this should help to dampen expectations a little bit. But certainly the international, unless the international prices of oil stabilize and start to reduce, this would have an impact on the Kenyan economy, a negative impact, and to a certain extent the growth rates which were being projected earlier would drop off to some extent.
Obviously, with inflation coming in at 6.5% in February, this is a real concern for the Central Bank of Kenya. But at the same time, authorities are bullish about growth, saying that we could see growth somewhere in the region of 6.5% this year, even as much as 8% next year. How feasible is that?
I think the growth expectations have to be tempered a little bit. The growth rates that we were talking of 3 months ago, 6.5% definitely looked achievable for 2011. I think we have to relook at those numbers now, and it is going to be difficult to get to 6.5% given the current economic scenario, given the current petroleum prices that are prevailing and the current inflation rates. So I think we will drop off a few percentage points from the targeted growth rate. But I think the long-term situation and the long-term outlook for the Kenyan economy is still positive, but possibly at a slower rate than was being projected earlier.